Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:24 a.m. Central Time, and I'm recording this in preparation for the market day of October the 20th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive in and see what we've got going on this morning. In our morning report, a little bit of weakness, but nothing terribly pronounced. All four broad market indices in the United States are down, but they're really only down just below scratch. So nothing to get too excited about. Crude oil also right around scratch. Euro up about zero point 0.4. Bonds down about 0.5%. And gold also right at scratch. In terms of overseas action, fairly muted. China is up over 1%. Hong Kong down about a third of a percent. Japan up about zero point 0.4. Germany down just marginally, as is United Kingdom down about a quarter of a percent. In terms of macroeconomic reports for today, we continue to have this slew of FOMC members speaking, including Fed Chair Janet Yellen. Be aware we do have the FOMC this week. If we are going to have another rate hike that comes in this year, I say another, if we're going to finally start to get a rate hike that comes in this year, this will be one of the two votes and where it could still happen in 2015. So that's probably the main event for the week, and indeed markets might get a little quiet heading into that announcement. So just kind of be prepared for kind of sideways and choppy action. Look for the potential, and indeed, if you're a day trader, look for clear signs of momentum and energy and volume participation to kind of back up follow through to your targets. If you find that that is lacking, don't chew yourself up in a market that's not likely to go anywhere given current macroeconomic reports. In terms of tomorrow, we do have crude oil inventories as its usual Wednesday time slot, so it's back to that. So that's enough on the macroeconomic reports. In terms of volatility, we have, look at the short-term VIX, continues to drop 13.87, though the skew continues to be high. A lot of people are buying put protection in front of this, and you cannot ignore that. IV percentiles getting about as low as we can see them. We have seen zeros. Certainly in this last year we've seen zeros, but these are very low numbers. IV percentiles on the S&P of 15, Russell 15, 13, and 15. No standard deviation moves were put in yesterday, and really you could see things are starting to get quite a bit more quiet across all four of the broad market indices. In terms of the regular daily report, I have a couple changes here. Still looking at phase 3, still expecting as our first bias, bull flags. IBD status is in confirmed uptrend. The accumulation distribution for the S&P is a pretty healthy B, but the Nasdaq still remains a bit of a warning sign at a D minus. One of the changes for today, GMI index was upgraded to a 5 out of 6 with a buy signal with yesterday's action. Primary market condition as dictated by the relationship of key moving average lines is in a weak bear. Decision points stock charts has not changed yet. We are looking to see that some of these intermediate terms will probably start to turn green if we continue to hold up with this bullishness. Intermediate term market posture, very bullish posture, upslope sentiment. There was a bearish cluster 2 days ago, but that has fallen off now. Let's see what else here. Position sizing opinions both come in as 100%. You see the intermediate term market posture still very bullish on the S&P, as is the Dow. Nasdaq remains in a bullish stance. Threshold level 1 is our hedge warning status, which means that There is some elevated risk still in the market. We are not yet back to normal conditions, but that doesn't mean that we're predicting a down move or a down move of any particular size. Um, but the conditions are somewhat elevated, and we call this the yellow light. In terms of specific conditions, volatility based, there's really nothing to get terribly excited about except for this skew. The skew continues to be elevated, and that clearly is a warning sign. New highs, new lows yesterday were in fine shape. Intermarket risk aversion indicators also I'm going to call this mixed. A number of these were actually could be better called neutral, so just be aware of that. And in terms of special opinions for today, nothing terribly new here. I'll let you read that. Since there's nothing new, I won't go into great depth on that today. But you should be cautiously bullish. You should be using a mix of spreads and so forth to be able to be somewhat defensive and yet leverage yourself into more bullish stance as long as this continues to follow through. But you are still at something of an elevated stance, and certainly that we would get a pullback wouldn't be surprising. But pullbacks are normal in bull markets, and we certainly set up our strategies to be able to withstand pullbacks. So I think that's probably enough for today. As always, if you find what you're getting from here is helpful to your trading, we greatly appreciate you retweeting us to your Twitter followers, to your StockTwit followers, like us on YouTube, and of course, subscribe to our YouTube channel. Disclaimers as always, hit the pause button if you need more time to review this. And we'll see you back here tomorrow morning before the market opens with the Falcon Global Market Preview. Good trading.